There's such a fine line, making money and losing money in the market.
We want to teach you the concepts.
You have to be okay with the type of trader that you are.
We want to teach you the processes.
This is what really gives the meat and potatoes to it.
We're going to teach you how to.
The bottom line is you want to make money trading.
I can promise you that I can make you a better trader.
Join T3 Live at the Boca Raton Hotel and Resort April 26th and 27th for an exclusive trading education event. Sign up now.
Good afternoon, everyone. This is T3 Live Editor-in-Chief John Darsie here to bring you the daily recap. So this morning in the morning call, Brittany and I went over a lot of different reasons why I think this market is headed lower, and we continue to get that type of action today as all the indices closed down. The S&P closed down around 0.7%, and the NASDAQ was even weaker, closing down around 1.2%. Just you're seeing sort of these faulty signals, some of the things we've been talking about come to roost a little bit. And it doesn't seem like people are that interested in buying a dip. You know, we had that snap back on Tuesday after that very harsh decline on Monday. It was the biggest decline we've seen in 2013. And then Tuesday's snapback was immediately sold, which is not something that we've seen so far this year. And I think something to take note of in addition to all the technical signs that we've been seeing that have been pointing to that eventual correction that everybody's been waiting for in 2013. But it feels like it's a little bit different this time around. We go to the chart of the spiders. We can see today's candle. We opened only slightly higher. It wasn't, a game-changing open or anything like that. After European markets were a little bit strong, but U.S. investors sold off, and we ended up closing just below the 50-day moving average on the spiders. So it'll be interesting to see tomorrow whether we continue to the downside or whether we sort of get some support from that 50-day, even though it was breached a little bit today. The market was able to close off its lows and pair some losses into the close, but like I said, tomorrow will be an interesting session, and obviously next week will be very important. We had a host of earnings after the close today, some big names in tech. We had Google, IBM, Microsoft all reported. We can go take a look at those charts. First, I'll take a look at Google intraday today. And it seems like somebody made a comment in the chat room that did somebody leak Google earnings again and it traded lower because it missed earnings? But you saw that big sell-off from this sort of a bear flag looking pattern after a gradual sell-off from above the 840 area. And today it broke below it as maybe some people were anticipating some weaker numbers from Google. But after the close, when it reported, if we go take a look at the 5-minute chart, looking at the 24-hour, well, I was going to say Google was up sharply after its report. It got as high as almost $800, but now it's all the way back down. It's trading around $775. Looks like it'll continue to be volatile after hours. We'll go back and look at that daily chart. So it traded back up here almost near the $800 level, back above to the upper end of this flag type pattern, but it looks like it's around 775, so still up 10 points from where it closed today, but who knows where it'll settle out the rest of the night and then tomorrow morning. I know there's some guys out on the trading floor trading it right now. You look at IBM, it did not have such a weak report or such a strong report. It also sold off during a session today, contributed to the weakness in the NASDAQ that I talked about, which was down much more significantly than all the other indices. We also look at the 5-minute, 24-hour chart of IBM. So it's trading around $200 here after hours, after going as low as around 195. But we go back to the daily chart there. It's trading around 200. So a significant drop after hours in IBM below its 200-day moving average. And this is one that Scott talked about in his 2013 predictions as one that he would be wary of because of the nature of a long-term steep uptrend. Is the trend is your friend basically until it's not. And you look at a monthly chart of IBM, and it's had a monster run since late 2008 from $80 a share up to over almost $220 a share. So be wary of this trend because if it does break to the downside, it can lead to a significant correction. And the last one we'll look at is Microsoft. Go back to the chart here. We'll look at the daily. So today Microsoft was a little bit more quiet. Obviously, you had that well-publicized move a couple weeks ago with Microsoft looking like it was getting some money rotating in, but then PC sales came in very light. Goldman downgraded it with a very bearish downgrade, and since then it's just sort of been chopping around in a tight range. If we also look at the 5-minute, 24-hour of Microsoft, we can see it is up a little bit after hours. Nothing crazy. It's up to 29.20. Go back to the daily chart. That's sort of just above this little range. So let's see if it can start to enter this gap from this harsh gap down that I was just talking about, but nothing really to note in Microsoft. And as we stay in tech, it didn't have earnings today, and they're still a little ways away, but you have Apple continuing to bleed lower. And this morning, something I talked about is that you saw a really harsh correction yesterday in Cirrus Logic, which is a big chip supplier for Apple's iPhones and iPads. The stock was down around 16% yesterday after a very bearish pre-announcement. And that leads me to believe that although Apple has corrected almost or more than 40% from its peak above $700 a share, is that Apple could be headed even lower if the indications from its suppliers are showing what's happening for demand for its products. You also had SanDisk report, and we'll look at that. First, we'll take a look at the chart of Apple before I start talking about its suppliers. But you look at Apple today; it was down, another big healthy drop. Now it's firmly below that $400 share mark. Yesterday we talked about it; it briefly dipped below $400, but today is the first time it's closed below that level since December 2011, and doesn't appear like the end of this downtrend is in sight for Apple. And I would, if you're going to look to trade it, it looks like you short bounces, but in general, I think it's a little bit out of play, especially after 2 harsh down days. I don't think there's any edge looking to continue to short it. But like I talked about, you had Cruise, CRUS, Cirrus Logic, really harsh down day yesterday. It was down almost 16%, continued lower today. And like I said, this is a chip supplier for the iPhone and iPad. And when you see suppliers showing weak demand for their products, it's obviously evidence that Apple's iPhone sales and things like that are not going to be up to par in its earnings report. And so I think that's a lot of what's being priced into the Apple stock right now. You also look at SanDisk, which is another chip supplier for Apple. Huge down move today after earnings, and that's a huge red flag for Apple. Like I keep talking about, see its suppliers trading sharply lower on weak demand and weak sales. So keep an eye on that. And just because Apple is below $400 a share doesn't mean it's a blind buy at this point. But I think at some point there will be a buying opportunity in Apple, but I don't think we're very close to it yet. The next major resistance is in the 380s. We talked about Morgan Stanley being the latest bank to beat consensus earning estimates but trade lower in the pre-market. It only ended up trading or opening slightly lower this morning, but during the session, as you can see, it sold off sharply like we've seen with a lot of the other banks. It closed on its lows. I don't know the percentage loss, but obviously you can see a wide red down bar for Morgan Stanley breaking this pivot, which filled this gap here that I had been talking about a lot when I talked about Morgan Stanley as a potential short out of this upper base. But you saw that pivot break, and it looks like Morgan Stanley's destined for its 200-day moving average down here around the 1933 area. Look at a couple of the other banks. Goldman continued lower after breaking its pivot yesterday. Another theme we talked about this morning in the morning call is that the financials look like they could be set to lead this market lower as a correction feels like it's in the offing. Take a look at Bank of America. After yesterday's harsh down move, another really bad day for Bank of America. Like yesterday, it was able to close off its lows, but it's coming into this major upper level floor. And if that floor breaks, it looks like, as is the case with a lot of the financials, that Bank of America is destined for its 200-day moving average. Last thing we'll take a look at is some commodities. Gold wasn't able to really get a significant bounce today. Like Brittany and I talked about, it was up about 2% in the pre-market. So it led some traders to believe that potentially after this range had tightened and formed a little lower level wedge pattern, that maybe gold could finally get that significant bounce. But there's still not a lot of people interested in buying this dip. I think there's more fears about deflation right now than there is about inflation, and that's driving this price drop in gold. And I wouldn't be in a rush to buy it for a lot of different reasons. But you also look at oil. USO is the United States Oil Fund. It's not a pure tracker of gold, of oil, but you can get the idea. Oil was actually able to bounce today, as you can see here on the chart. So maybe oil's been able to stop the bleeding. And that could weigh on transports even more, though. The transports, the IYT, is one sector we've been talking about that's showing relative weakness. It actually held up okay today, but it still looks like it has a head and shoulders pattern that has a measured move down to around the 200-day moving average. And a theme that I keep talking about is 200-day moving averages, and that's always a natural place for stocks and ETFs and indices to correct to when you do get a correction. And then maybe at that point you get some sort of pause, but I feel like a lot of stocks, a lot of ETFs, a lot of indices maybe look poised to test those 200-day moving averages, and then we'll reevaluate composure at that point. But I remain bearish on the market in general. And tomorrow, like I said, it'll be interesting to see whether we can get 3 straight down days, which has been very much a rarity in 2013. But I think it's the traders are feeling a little bit more bearish now, and I think more bearish than they felt at all so far this year. So that's something to definitely keep an eye on. And you can still, I think, sit short some of the more relative weak sectors. But after a few down days in a row in a macro uptrending tape, I wouldn't have your expectations be too high on shorts. But I think continue to short bounces if we do get bounces back up into key levels. This has been John Darsie here for your daily recap. Have a good day Friday.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.